Okay, folks, good morning. My apologies for being late today. So we find ourselves opening up limit down yet again. I'm going to scroll through some charts. We'll begin with the dollar, which continues to surge. But this is not the big story. The big story has more to do with yields. And this is a 4-hour chart. These will all be 4-hour charts. And I want to talk about a couple of extreme oversold trades that are out there, as well as what do I like more, the price action of silver or the price action of gold? We're going to talk about it. We're seeing some pressure today on gold, a little bit of pressure as well on silver, but at current, my preference is for silver, and the only reason why is because of the technicals. And because at current, my appetite for being a momentum trader is simply not there. Now, the dollar became very overbought on Tuesday, and we were able to trade sideways overnight for the most part and alleviate that overbought condition and press higher. This is a very strong chart. This is a 30-minute chart. I usually use 4-hour charts. A very strong chart here. Taking a look at, I'll go to the S&Ps, but it's telling you what you already know. We'll limit down again. That happened at 1:30 this morning. Taking a look at oil. Oil, wow. Wow, we're breaking again. We're breaking again. This is so bad. We're pressing the lower band of this channel. We've broken support on RSI, and we're breaking it on price now as well. All right. The real story this morning, Eduardo, can the U.S. afford a stronger dollar given the current situation? Can't help to think that U.S. needs a weaker dollar to get through what is coming. Yeah, a weaker dollar would benefit us, but don't forget, we're the world's reserve currency, so that's why you're seeing strength in the U.S. dollar. There's actually a dollar shortage, believe it or not, and that's helping drive up the dollar. Roderick, S&P and the Qs are still trading. Yeah, they should be. Yeah, it's only the futures that are down. No, I shouldn't say down. My apologies. Only the futures that are closed. Sorry about that. Let's. I want to take a look at a couple of. First, a comparison here. Gold versus silver. Dollar strong means U.S. not likely to crash. Correct. I think that it's less worse. That's what the price action is implying, is that it's less worse than the the rest of the world. As bad as we are, we're not as bad as the rest of the world. So, when you really have to worry is when you have bond prices and yields falling in tandem. That means nobody wants to touch us. So by virtue of the fact that we have yields that are rallying, that means people want our bonds, and the dollar is rallying. It means that there's still some confidence left in the United States. So I would perceive it as being a good thing, but I'm a closet economist. So let's just put things into perspective. It's a good thing. You don't want to be Zimbabwe like where you're printing $1 trillion notes, to act as currency. That's when you have real serious problems. That's when you're scraping around in garbage pails for food. Did the yield curve invert last 6 months? Yeah, well, the yield curve inverted back in August, and we'll bring it up. I use the 2-year versus the 10-year, and you can see that we have been steepening, and this is when you have to worry about the markets. And typically, you have the price of gold, which rallies along with this steepening yield curve. You can see back here in August, we inverted. We did not have a double bottom retest, and this is probably the Federal Reserve that caused this, that we did not pull back and reinvert. We did so back here during the financial crisis, meaning we inverted first in February 2006, then reinverted a double bottom setup back in October. We did the same back here in 1995, reinverted back in 1997. We came close. Did we reinvert? Yeah, we did. Back here in April of 2000, reinverted back here in August of 2000. We didn't have that reinversion. We came very, very close, but no cigar this time around. But we do have a steepening yield curve, and overlaid here is the S&P 500 in blue, and that's when things get ugly. So this is the environment that we find ourselves in now. Will there be a dawn? Yeah, there's going to be a dawn. I mean, simply take a look at the VIX. Here's the VIX on a daily basis. I mentioned yesterday morning, I expected the VIX to go higher, longer term. We did pull back yesterday, and I still think that we're going to head up higher. Now, we are seeing RSI begin to drop off. So VIX is beginning to lose a little bit of momentum. I've been coming on here. I've been saying I've been somewhat bearish. I've been bearish for a while now. And last Thursday, I said, you know what? I think we're going to rally. What happened? We rallied. I think that we are beginning to see the markets begin to find a little bit of value and find some technical support. And we are probably going to rally within the next couple of trading days and put up a back-to-back rally, not a one-day rally. That's not a rally. That's a relief. It's a rally, but it's a relief rally. And when you take a look at the chart of the VIX on a quarterly basis, I mean, this is one scary stochastic. However, I mean, it's a cup with handle formation we broke out. But this is the VIX. It's volatile, and it's meant to be volatile. And we are very extended here on price. We are trading well above the third standard deviation Bollinger Band. And technically, traditionally, I don't use the 3 standard deviation Bollinger Band on the VIX. I use the 5 standard because you need a higher level of pain threshold to use when you're trading or doing analysis of the VIX. And you can see that using this 5 standard deviation Bollinger Band, basically it's not where you're supposed to be on the VIX, much like the 3rd standard deviation Bollinger Band is for stocks. We're there. We're there. We did surge through it back in 2008. Can we go higher? Absolutely. No doubt about it. And I said this yesterday morning. We did pull back yesterday. I fully expect us to move up higher today. We can possibly shoot over 100 on the VIX before all is said and done because there's just so much fear out there. So the key is to keep a pile of cash, folks. I mean, there are opportunities that are out there that are building that are just ripe for a rally. I'm going to go over one of them right now. Take a look at, I'm going to go over a comparison of silver and gold. I'll do that in a moment. But when you take a look at names like Callaway Golf, and you may be saying, you got to be crazy, you're buying a golf company. It's solvent. Wrong chart list, my apologies. Here we go. Bear with me. I have not bought, you see this up here, I'm going to digress here a little bit, Carnival. I think we're going lower here. We're going to be seeing single digits on Carnival. We'll look to buy it then, not now. Here's Callaway Golf on a monthly basis. Yesterday, we tapped support last seen back in December of 2014. We're probably going to overshoot to the downside to the October 14 lows at around 6.67. But when you take a look at let's go to a weekly chart first. At a weekly chart, we're trading down below the 3rd standard deviation Bollinger Band on a weekly basis. And there are a lot of shorts in this name. A ton of shorts waiting to get squeezed. I think there's about 10 days worth of short covering at last look. RSI weekly basis 14.69. But here's the real story. On a daily chart, RSI 7.90. We're probably going a little bit lower today. ADX is at 77.95, and you're beginning to see your Stokes hook up. So I expect a short covering rally here fairly soon, despite the fact that the futures are down. This is why I want to buy extreme oversold stocks that are solvent. Hey, Pat, good morning. Good question. How are we doing? Limit down again, pal. Sorry to say. So when I look at a comparison, so we like names like Callaway Golf, extreme oversold stocks. I don't want to buy anything that's momentum. When I look at precious metals, especially with yields that are dropping this morning, we've been somewhat disciplined in not chasing gold, and instead looked at the miners. I mean, not the miners, the price of silver. And silver is sitting with RSI 14.97. Whereas with gold, we're seeing RSI at 37.13. And we saw a little bit of topping action yesterday on the price of gold. So let's go to the morning price action of each Oil continues to weaken up here. Gold hasn't changed much since our last look, which is good. We're down around 2%. This is a 4-hour chart. Evrondo, unemployment claims are forecast to start increasing. Yeah, they already have. Because of the bars and restaurants, whatnot, all forced closure. Silver. Whereas you have gold that's down 2% this morning, silver's down. I don't want to use the phrase only. 1% is a lot, but it's down 1%. So less worse than what we're seeing on gold. So right now, my preference is for silver. That's not to say that I won't be buying gold fairly soon on this pullback. I've been looking for a pullback and a retest, in particular on the gold miners. Let's see how they're looking. NUGT. Yeah, we're pulling back this morning. And what we're looking for is a higher low. Have we seen the bottom here yet? Is this the double bottom retest? I'm not quite sure. I want to keep an open mind. And I would really caution about chasing these stocks in the after hours session. Look what they did the past couple of trading days. They rallied NUGT in the after hours session. Right, it closed at 14.37. Actually 14.52 yesterday. And they drifted it up higher to over $15 per share in the after hours session. And they dropped it this morning. They did the same thing the prior evening. They drifted it up in the after hours session. The next morning, it got dropped yet again, only to recover, thank goodness. But this is why I don't want to buy in the after hours session. What they're trying to do is manipulate those with the fear of missing out. Right? We don't want to be part of that group. Right? That's how they rob you of your money right now. In this market environment, they want you to think that the markets are rallying back. You're missing the boat. It's so hard, including me. I am no different than anybody else out there. It is very, very difficult to fight that fear of missing out. No doubt about it. But step away from the computer. I know with the virus, it's hard to go do anything else. Go garden, for Christ's sakes. But avoid staring at this screen because it will drive you mad. We're going to get pullbacks and retests of prior lows at some point in time. Will we drop back down and retest the all-time low on NUG, for an example? Probably not, but we may. Probably not, but you're going to get your opportunities. Please. That's me just being passionate, not being condescending. I hope that doesn't get taken the wrong way. All right, Pat, baby buyback, the calls I sold. Yeah, I think you sold the 16s, right, Pat? That would be a good idea. They're expiring on this Friday. Pat, just so everybody is clued in on what we're talking about. Pat is long of the NUGT and sold covered calls to generate income and put on a little bit of a hedge. And that trade is working out well for them. Good for you, Pat. Let's talk about yields. Yields are, well, this is actually not the yields, my apologies. This is the 10-year Treasury note, not the yield. And it is dropping like a rock. This is a 30-minute chart. We're down about 1.75% on the 10-year yield, despite all of the liquidity the Fed has generated. We are short of bonds at current. Using the TBT, see how we're doing this morning. Yeah, we're up on that trade this morning. Here's the inverse. This is the TLT, and you can see that it's getting hammered. So there's something very, very wrong out there with the credit markets. Very, very wrong. Let's see what else we have here to go over. Halliburton looking good. This is going to be a buy at some point in time. Probably going to see lower lows first, though. Let's go to a daily chart. We're eyeballing Halliburton. We're eyeballing Carnival Cruise Lines. I think Carnival Cruise Lines is ultimately going to end up in the single digits. And that would be very interesting. Here's Halliburton. We'll go to a monthly chart first. And I think that ultimately we're coming down here to a sub 5 handle on Halliburton. And that'll be a very good entry point. At current, it's yielding over 11%. I don't think that dividend is all that safe, though. RSI on a daily basis at 15.11. And the daily price action is looking pretty good here. This is a doji formation, or very close to a doji formation. And that's a sign of indecision. So I think that we're going to rally here fairly soon. And that's a bold statement saying that with futures limit down. But I think that we will rally fairly soon. Let's go to Carnival Cruise Lines. Still, RSI is well above that 17 mark that I'd be looking for. And on price, we're still above a 10 handle. I want to see this much lower. Let's go to a monthly chart. Q1 window dressing. I don't know how much these guys are window dressing. I think that they have been caught with their pants down. And they're not thinking too much about window dressing. $10.74 would be an interesting price point. Last seen back here in July of 2001. But ultimately, I'd like to see it down below this mark, maybe with a 6 or a 7 handle. Do funds still need to window dress? Yeah, everything's down though. I mean, so what are you going to sell? I don't think that, unlike prior quarters, I'll put it to you this way: the expectation on the part of the investor is so low that I don't think that they're going to feel the need to get rid of. Maybe a Carnival Cruise Line. Nobody's going to want to see a Carnival Cruise Line unless they're a value fund. So I shouldn't say value fund, unless you have a fund that's out there that is trading in extreme distressed situations. So, hey Sam, how you doing? In Italy, short selling block for 3 months. Boeing's down to 107. Oh boy. We were talking about this a couple of months ago, and I'll never forget this conversation. I caught some flack for it too. We were talking about the monthly chart of Boeing. And I said this back then. I said, this chart, they are going. Look at this head and shoulders setup. And we were looking for a break. And I even remember saying, look for a rally back in an effort to try to recapture. And wow. What can satisfy the U.S. dollar demand? Hasn't the Fed already done everything? Not quite sure how to answer that question. What can satisfy the U.S. dollar demand? I guess what would satisfy it is if other governments got their fiscal act together. I mean, we're bad, but you have the EU that's actually even worse in some respects. You know, they've had negative yields for quite some time now. So we're just going back to ZERP. So if they raised rates, that would certainly satisfy dollar demands because you'd see people rotating back into the euro. But we're nowhere near talking about that right now. Have I seen Euro USD? No, I have not. Let's go take a look at it. Yeah, and this is by and large an effect or the impact of having negative yields. I'm surprised that we haven't even gone par with the euro after all this time. Steven, I just signed on. What happened to gold down so much? Steven, I think that what we're seeing is more a reaction to technicals and a reaction to the rise in yields. Let's bring up bonds again for the benefit of Stephen. All right, so here is the 10-year Treasury bond. It took it on the chin late yesterday. It continued to take it on the chin overnight. Gold held up. And I found that rather shocking because typically you'll get a negative reaction to gold when you have rising yields. And it didn't happen. That was prolonged until about, I don't know, mid last night, about 1:30. And gold sold off. We're beginning to catch a bid here now with this 5 a.m. bar. This is a 4-hour chart. 5 a.m. bar is now positive, but a lot of damage has been done here. And with that price action, gold took it on the chin. But in going back and speaking about the technicals, we need to not ignore the technicals as well. Gold rallied off the lows. And this is no great shock that we would expect to see. Let's just bring up the GLD. A pullback. Let's go daily chart first. We were oversold relative to in green here. I have the 3 standard deviation Bollinger Band. We were oversold relative to it. We rallied yesterday. We sold off the highs of the day. We hit resistance at 146 on the GLD. And we sold off. There should be no great shock, because to expect the price of gold to just go straight up higher is not reasonable. It's just not reasonable. We need a pullback. We need a higher low. And then ideally, we rally up and through this resistance level. MAH, Apple pre-market. Yeah, Kat from Prince Island, Canada, was on yesterday. And she was asking about Apple, and I said, I don't like it, because I drew these lines yesterday. I said, we have resistance above, as noted by these topping tails. I was worried about a break, and we got the break, and here we are yet again, moving lower. So I don't see a buy here yet on Apple. Pat, Nugget just up 50 and JNUG up 79 in the pre-market, Pat? I'm not seeing much price movement here, pal. Are you talking about in percentage terms? Price terms or percentage terms? All right, so here's JNUG. Yeah, we have ticked up higher here. We closed out the day at 13. What a drop. Again, folks, avoid this after hours price action. I'm telling you right now, they're luring people in with that FOMO, that fear of missing out, only to get sucker punched the next day. I'm not saying we can't rally today and go up to new all-time highs here, but it's such a thinly traded market in the after hours session, and they're just luring people in with that fear of missing out. It's a powerful, powerful emotion. Sam, before the crash, COT data was 100% versus 0. I'm trying to remember what COT data was, Sam. It's a little bit, my brain's not working as well as it should right now. You'll have to remind me. All right. With that, folks, is that a symbol? Oh, put call ratio. COT is the positions of big speculators. Good morning, Reno. Let's see. Okay, let's see what we got here. I don't look at this all that much, folks, so I'm not going to pretend to be actually, that's not what I want. A genius here when it comes to this stuff. But I'm a quick learner. All right, so we have a huge spike up in puts relative to calls. I get that. Let's do a price performance. I do this to validate what I'm seeing here. I'm going to overlay the S&P 500 in blue. Let's change that color. It's not working out well. All right, so this hasn't updated because I'm not seeing the spike up from yesterday. This is a monthly chart, though. That's why. That's better. Now I see the monthly. All right, so we pulled back, rallied. We have an inverse correlation, obviously. We could still head higher. This is the financial crisis, 1.35. This is a yearly view. Similar to the VIX, it's a sentiment indicator. It's good that we saw some topping action, but we could still head up higher. The actual all-time high was back in March of 2008. Sam, do you think? No, I have it, Sam. Thank you. UJZ down 8%. Glad we didn't touch that one. What about biotech stocks? We were looking at the biotech stocks. I was looking at LABU. They're not oversold enough yet. I think there's more downside here to go. Maybe a retest of the lows of yesterday. I think that there's definitely opportunity here. What is it? The B? I'm trying to remember. Biotech ETF. IBB, that's it. IBB. Not a bad chart relative to history here. Not a major break on this chart. So we're looking at the LABU. There's not enough data on a quarterly basis here. It's simply gotten hammered. And when you take a look on a weekly basis, it's just been thrown out. But I would like to see RSI sub 20. We're not there yet. We're probably still going to have some pressure here this morning. But I like the biotechs. They're certainly on the watch list as a potential long. And we were looking at the utilities yesterday and began nibbling. Now we're using the leveraged ETF. You saw a nice rally yesterday. Do I think the bottom is in here? Who's to say, right? But longer term, the utilities are looking like a place where money's going to want to go park itself and get paid. And right now, the XLU is yielding 3 1/3%. And the XLU weekly, I mean, we're down spot 2% on the utilities. Whereas people trading, people want to keep going back to technology. That trade is all but done. I wouldn't touch technology with a 10-foot pole. It's still down nearly 8% on the week, despite the rally yesterday. So do I want to buy technology, or basically do I want safety versus growth? I'll go with safety right now. All right. With that, folks, I'm going to say everybody have a profitable trading day. Be careful out there. And cash is king. And be well.